the latest tax legislations and their implications on the cryptocurrency industry. As cryptocurrencies spread across the globe, so too do the regulations put in place to try to govern them. The landscape is constantly evolving, and keeping up to date with the rules in different territories isn't easy. Due to the blockchain's decentralized structure, its technology presents numerous challenges to governments seeking to regulate and control cryptocurrency use. When users trade cryptocurrencies, these transactions occur across an international network. Governments often lack the ability to identify the users trading these currencies. Additionally, regulatory agencies lack the ability to track exactly when new coins enter circulation, or to identify when specific coins or pieces of coins move between users. However, several governments have come up with legislations to regulate the sector. Below are some of the latest tax legislations on the crypto industry. Cryptocurrency is slowly but surely redefining and helping expand the world of finance, with companies like MasterCard and Venmo jumping into the fray to support the growth of cryptocurrencies. At the same time, the International Revenue Service is taking note of the growth in digital currencies and closely scrutinizing tax returns for any discrepancies involving cryptocurrency. If you own or have transacted in digital currencies, you must follow and comply with the IRS's guidance on tax reporting involving cryptocurrency. Understanding cryptocurrency terms, tax laws, and reporting will not only help you stay IRS compliant, but will also help you more easily recognize crypto tax saving opportunities. Cryptocurrency reporting can be tricky, especially since some transactions trigger capital gains while others count as ordinary income. Let's cover the capital gains transactions first. Cryptocurrencies are capital assets, which means that they receive similar tax treatment to stocks. Any realized income from the appreciation in the value of the crypto asset is taxable as a capital gain, though you can offset them against capital losses. Here are some common crypto transactions that trigger capital gains, which the IRS requires you to report on the 8949 tax form. Sale of cryptocurrency for cash. Exchange of one virtual currency for another. Using cryptocurrency or crypto debit cards to pay a merchant. In addition to gains and losses, you will need to report all receipts of cryptocurrency earned as income on your income tax forms, such as mining or staking cryptocurrency, receipt of AirDrop tokens because of a hard fork, payments received in the form of cryptocurrency. Now, let's look at some of the latest crypto tax laws and their implications as per both the US and UK laws. Tax implications of AirDrops and hard forks US law. The latest IRS guidance states that taxpayers must recognize ordinary income based on the fair market value of new tokens received in both airdrops and hard forks. Airdrops are taxable in the same way, whether they're the result of previous hard forks or marketing efforts. You must report this income on Form 1040 as other income. The transactions don't need to go on Form 8949, where you report your short-term and long-term capital gain from cryptocurrency investments. The tax implications of Decentralized Finance-US Law. Decentralized finance, DeFi, takes banks out of the equation and allows individual investors to lend, trade, and borrow from each other directly. There's a wide range of taxable activities that fall under the bucket of DeFi, and they receive different treatments. Here are some of the most common types of activities. Lending, that's lending out your cryptocurrency to generate interest, which can be taxable as ordinary income or capital gains depending on the DeFi platform. Receipt of incentive tokens. Some platforms issue tokens to reward their users, which are generally taxable as ordinary income at their fair market value upon receipt. Transfers into tokens and liquidity pools. In general, it's safest to assume that these transactions trigger capital gains and losses. DeFi is one of the most rapidly evolving areas of the cryptocurrency industry. Again, the IRS has yet to issue any specific guidance, but it's generally safest to assume similar rules apply to those that govern other crypto transactions. When in doubt, always consult a tax professional. The tax implications of Non-Fungible Tokens-US Law. NFTs are usually capital assets, just like digital currencies. You can either create NFTs to sell in a marketplace, or you can invest them to buy and sell as a trader. Investors should generally treat them as property and follow the typical rules of capital gains and losses. It is possible, however, that NFTs could be viewed as collectibles. Collectibles are subject to a 28% long-term capital gain tax rate, regardless of income levels. The IRS has yet to confirm which NFTs are subject to collectible rules. However, it is important to note that the difference only comes into question when assets are held for over 1 year. Tax implications of cryptocurrency mining, U.S. law. Mining digital currency creates numerous tax implications that a user must report on multiple forms. Whether you're a business with a custom mining rig or you mine on a computer as a personal investment, you must report the mined cryptocurrency as ordinary income on your tax forms. Taxpayers who treat their cryptocurrency activities as a personal investment have fewer paperwork responsibilities, but they will not be able to net any of their expenses against their income. They must report their income on line 8 of Form 1040, Other Income, pay taxes on their entire crypto income at their ordinary income rate. Investors who mine crypto in their free time will usually be better off treating the activities as a personal investment. It is difficult to incur enough deductible expenses to make taking on the extra self-employment taxes worthwhile. Taxpayers who treat their cryptocurrency activities as a business will generally have more paperwork than those who treat them as a personal investment. They must file as a sole proprietorship, corporation, or limited liability company, an LLC, report and deduct ordinary and necessary expenses incurred as part of the business. If filing as a sole proprietorship, you will pay an additional 15.3% self-employment tax and will report income and expenses on Schedule C of Form 1040. What does the UK crypto tax law say? The amount of tax a business must pay will depend on its income, expenditure, profit, and gains. These must be declared annually to HMRC on either a self-assessment tax return for individuals or a company tax return. HMRC will consider each case on the basis of its own facts and circumstances. It will apply the relevant legislation and case law to determine the correct tax treatment, including, where relevant, the contractual terms regulating the exchange tokens. Use of bitcoins for acquiring goods and services. Out of scope. No VAT should be levied on the value of the bitcoins themselves. Supplies of goods or services, subject to VAT, remunerated in bitcoins. Taxable. The supply of goods and services, subject to VAT and remunerated by the way of Bitcoin, would for VAT purposes be treated in the same way as any other supply. VAT should therefore be levied on the goods or services provided. Services supplied by digital wallets and their tax implications under the UK law. Out of scope. A large majority of the services supplied by digital wallet providers are free of charge, which sees these transactions falling outside the scope of VAT. Taxable. If, however, some digital wallet providers ask for payments or fees in exchange for their services, it seems that the transaction would be taxable. Exempt. Such services could, however, be seen as exempt pursuant to Article 135(1)(e) of the VAT Directive, on the grounds of them being transactions directly concerning currency. Not exempt. It seems that services supplied by digital wallet providers could not be exempt pursuant to Article 135(1)(d) of the VAT Directive. That's all for today. If you have any questions regarding crypto, don't hesitate to reach out to us in the comments section. Also, let us know on what topic you want to see in the next video.